And what's critical to understand when it comes to the sort of the regulatory part of this is that contrary to what you may have heard in the news or out there, there is zero ambiguity when it comes to the law when we're talking about syndications, especially when we're tokenized syndication. The SEC doesn't think that we need additional regulation. They don't think that there's some ambiguity. They are very clear that the same exact securities laws that apply to our normal securities are going to apply to a tokenization raise. Welcome back to the Real Estate Syndicator Live, episode 30. And as you can tell, I'm not in my office today. I'm in beautiful downtown Austin, Texas, with all of its glory, 90-degree weather and humidity. But always, I used to live here, if you guys know, love the town, happy to be here. I'm actually here for another seminar, a blockchain real estate summit put on by my good friend, Michael Flight. And interestingly enough, the lawyers will lead off the conference. There's going to be a bunch of lawyers, and we're all going to talk about the legal compliance, which sounds like a brilliant way to start a conference. But hey, I'm here, and so I figured why not do a live on the topic? It's something that I've been thinking about a lot. And so this is going to be the first of many pieces of content that you're going to see me talking about the tokenization of real estate. Specifically, obviously, as it pertains to syndicators, right? I mean, there's a bunch of different ways you can tokenize things. You can tokenize anything and everything will be tokenized. But I'm obviously going to be focusing on the syndication part and specifically the real estate syndication. I truly believe, as I mentioned in my email and social media post today, that 5 to 7 years from now, I don't want to say the vast majority, but the majority of syndicators will be tokenizing their real estate. Or their syndications, I should say better. Might be sooner, might be later, but that's kind of something that I've noticed. And in fact, probably over the last 12 months, 12 to 18 months, we've seen that. We're getting more and more inquiries, calls, people looking for information and just kind of getting a basic idea of what that looks like. And we've started to actually do some of these what we call security token offerings. We don't want to use the word ICO. ICO has a very bad, ICO is the initial coin offerings, and just a term of art. It's all the same thing, but they had such a bad name and bad reputation since they were all illegal. They came up with a new name, and we call it now a security token offering. But this is going to be super basic. This is literally going to be maybe the pros and cons, or the sort of the tokenization of real estate 101. And like I said, it's going to be the first of many. I'm sure at some point there'll be some guests on the topic, but wanted to do this for a while. And I wanted to get going on the question that I don't know if Darwin's on here, but Darwin had a great in the emails. He just said, "Hey, I've been doing like $1 billion of acquisitions here, and I have no idea what this tokenization thing is. So can you please explain it to me in 3 easy steps or something," which is obviously tough to do. But let's try and get this down to sort of basic. Again, I know there's a lot of you guys here that are probably even more well-versed on tokenization than I am. I obviously have the legal piece down, but in its essence, tokenization of syndications or real estate is quite simply a digital representation of the underlying assets. That's all it is. So in our world, when we are doing syndications, we are issuing LLC units. Most of our syndications are done with an LLC, but if you haven't, some people do an LP here and there, but let's assume you're doing a syndication with an LLC and you are issuing your investor, let's say, a 2.5% interest in that LLC. All this is doing is taking that 2.5% and turning it into, let's say you've issued 1,000 tokens and this person's going to get 25 tokens, which represents that 2.5% interest. Instead of getting the stock certificate or the membership certificate, which is what you would typically get, that piece of paper, you're simply getting a token, a security token. Now, it's important to realize that what we are talking about is a security token, because there's a bunch of other types of tokens out there that I don't want to get too involved. There's utility tokens, there's all kinds of other stuff out there. But what we're talking about specifically is a security token. And what's critical to understand when it comes to the sort of the regulatory SEC part of this is that contrary to what you may have heard in the news or out there, there is zero ambiguity when it comes to the law when we're talking about syndications, especially when we're tokenized syndication. The SEC doesn't think that we need additional regulation. They don't think that there's some ambiguity. They are very clear that the same exact securities laws that apply to our normal securities, syndications, I mean, are going to apply to a tokenization raise. The ambiguity really lies on whether something, when it's not a security, when it's not just a digital representation of an asset, but maybe it's a utility token. And by utility token, I simply mean it's a token that has some utility, has some value outside of sort of a real asset. My favorite example of a utility token is, I'm with American Airlines, but all those mileage clubs that everybody belongs to, like I'm with American Airlines, so I have American miles. And I've got, I don't know, I've got quite a few actually because I travel, but I've got like 500,000 miles on American. Well, those will eventually turn into tokens. That's probably going to be way less than 5 to 7 years, but those airline mileages will now be, instead of 500,000 miles, I'm going to have 500,000 tokens. And even if I'm buying those, which I can do today, right? American Airlines, I can buy those miles for sometimes they're on sale or 25 cents or $2. But that would be an example of a utility token where I'd be buying these miles from American Airlines. But obviously, I'm not going to be participating in the profit and loss of American Airlines. I'm not buying shares in their company. What I'm talking about is when you're buying shares in the company or shares in the syndication, because that is what the tokenization is. Now, to be fair, it's not perfect, right? So we're applying 90-year-old law, right? We're talking about the Securities Act of 1933 and 34, primarily 33. So we're coming up on 90 years. And so I think the hope is that we will probably carve out or create some specific regulations for the token piece. But right now, if anybody tells you, oh, we're just waiting for some clarity on the regulatory front, when it comes to what we're talking about, there's absolutely zero ambiguity, at least according to the SEC, right? And so same thing, you've got to either, you guys have seen me before, but when you're going to do this, it's still, number one, you're going to have to, register that tokenization or that security with the SEC, or number two, you're going to have to find an exemption. And we're going to be talking about the same Reg D, 506B, 506C. With tokenizations, you tend to see more 506Cs and actually some CFs, some crowdfunding, regulated crowdfundings, just because, and Reg A, because the idea, and I'll get to in a second as to why this even matters or why it's beneficial. The idea is that you can go out there to the public, right? So you tend to see more 506Cs, Reg As, and Reg CFs with these types of raises, so that people can go to the public and actually sell these things on the open market. But you're gonna register, find an exemption, or as we all know, number three, it's illegal. And the fourth one that you would start talking about on the regulatory front that we don't usually talk about in our normal syndications is this Rule 147, which I've done a live on before, but this is the resale, because this is the kind of the crux of why people like tokenization, and I'll get to that in a second. But Rule 147 is simply the exemption that people rely on when they resell the security. And again, I did a live on this, I think, I don't know, maybe 6 or 7 or 8 times ago. But that simply means, I'm selling, let's say I got Drew in front of me here, I'm selling my syndication. Drew's a limited partner, he owns 2%. He then, a year later, 2 years later, 5 years later, wants to sell it to somebody else. Well, he's selling a security himself. And so how does he go about doing this in terms of the regulatory framework? And he's not going to rely on 506B, 506C, because those are limited to the issuers, the people actually putting together syndication. He's got to rely on some other exemption. And the most popular one is this exemption 147, which essentially just restricts you. There's a lot of restrictions, but the main one is you've got to wait a year. Right, as you guys should know, you're receiving restricted securities when you're doing a syndication. And so you've got to hold on to them for at least a year. And that's going to become important when we tokenize, because the number one reason why tokenization of real estate is so appealing, and this is to answer the questions out there, well, like, why do I even care about this tokenization? And that is the liquidity that it provides, or at least the promise of liquidity that it provides in the future, meaning that, as a passive investor, you're going to be able to take your syndication and go to a website or go to an exchange and actually sell your security without too much hassle. And you don't have to be locked into the deal for 5 to 7 years or 10 years. You're going to be able to get out. Again, you're going to at least wait a year, but you're going to be able to get out in a year or 2 years, 3 years. And that's really, if you ask, you ask 1,000 syndicators who like tokenization, you ask them, what's the benefit? Why should I care? Why should I pay attention? Why are you doing it? the number one answer is going to be liquidity in terms of third-party liquidity, sort of the secondary market. Right now, we don't really have a secondary market for our syndication. And that's probably one of the biggest downfalls of the private markets, right? If you buy a public stock, Google, Apple, Amazon, whatever, and you decide tomorrow, you know what, I know I put 50K into it, but I want my money back. I don't like the way things are going. You just click a button and boom, you sold it. And it's the end of the story. But obviously with a syndication, you're kind of quote unquote stuck in your syndication for, again, 5 to 7 years. And even worse, if you want to, you obviously can get out. If you look at the operating agreement, there are mechanisms for your syndication to get out, but there's what we call sort of an illiquidity premium or maybe a penalty depending on what side you're on. But obviously, if you're only selling 2% of the company, especially if you're trying to sell it under sort of under duress, so to speak, because it's an emergency or something, you're not going to get paid 2% of what the company's worth. There's going to be a discount. There's this illiquidity discount. Anytime you buy or sell an asset that's fractionalized, even if it's a 50-50 partnership or a third partnership between 3 people, you're not going to get a third or half of the value of the company, even if the company's valued at $100. There's going to be a discount. And that's some of the things that the tokenization is really meant to address. I'm trying to perfect the, actually, let me just backtrack. Yeah, let me actually go into this. I'm trying to perfect the analogies. I mean, if somebody wants to share after I'm done here with my little babble for 15 or 20 minutes, if somebody wants to share a good analogy or a good way to explain it, I'm obviously open to hearing that. But the way I thought about it is that, look, I mean, the technology exists today forget about tokenization. I mean, tokenization, again, is just a digital representation on its face. So, the technology exists today. And in fact, it does exist in some places where you do have third-party websites or whatever. So theoretically, you can go on there. Somebody can post their syndication, their 2% interest in a bunch of different syndications, and you can go on there and peruse. And if you like something, you can hit the buy button, and you could go through the acquisition process. But what you can't do is, even if you find a deal that you really love and that you've done your due diligence, you've somehow got a copy of all the documents in the market and everything, and you like this investment. And again, I'm going to pick on Drew, but because I just saw him. But so Drew owns 2.5% of this company. He owns 25 tokens. He wants to sell me 5 of those tokens. Even if I love the investment and I'm on this website and I see the buy button, just like if you try and buy some NFTs these days, you just go on the website. Oh, boom, let me hit buy. I guarantee you're not going to just go hit the buy button and wire $50,000 or deposit $50,000 in your account and just send Drew or this mysterious person $50,000 or $100,000 or whatever it is that he's asking for. And the reason for that is you just don't have the trust, right? You don't know, you may not even know who this person is, but how do you really know that Drew owns 2.5% of this company, right? I'm about to, and I'll have it in, I'm working on a blog or something, but you know how easy it is to fake documents these days in terms of ownership? I mean, how hard is it to show you an operating agreement, right? How hard is it to show you a stock certificate? How hard is it for me to show you tax returns that are just flat out made up? In my example that I put together, because again, I'm trying to figure out the best way to explain this. I have documents showing that I actually own a 2.5% interest in the White House, right? With where the president of the United States lives, right? And so I've created this, 1600 Pennsylvania Avenue LLC. And so I've got the operating agreement for the company. It's signed. It's got a cap table. It shows that I own 2.5%. I've got the stock certificate, and I also have my tax returns. My tax returns show, in my Schedule C that, hey, here's my 2.5 interest of 1600 Avenue. That's the problem. There's no transparency. There's no trust, right? Unless you rely on some intermediary, some third party that's either the website or the exchange that I'm using, or I have to go hire a company to do all this due diligence for me, and that of course adds time and cost. But the idea or the sort of the dream is that you're going to have an opportunity here in the next 5, 7, 10, however long it takes, but there's going to be a point in time where you're going to be able to go on these things and not only be comfortable or confident that the documents you are reviewing for your due diligence are accurate and true, and there really are the true docs, but also the ownership, that this person really does have a 2.5% ownership of this company. He has the right to sell it. He hasn't sold it to 10 other people before selling it to me. He hasn't falsified the documentation. And this is all possible because of obviously the blockchain technology or blockchain. And again, this is not a presentation on blockchain. But again, for purposes, I think, of this discussion, especially if there's people who haven't quite grabbed, what blockchain is, and I think I'm going to articulate it in my article a little bit more in detail. But for purposes of today, I would just think of the blockchain as an Excel spreadsheet. That's about as simple as I can explain it. Think of an Excel spreadsheet that has, in our situation on syndication, let's just assume it's the cap table, right? And just think of an Excel spreadsheet that you prepare so it's accurate, but that everybody in the world, or everybody in our syndication community or an investment decision, has a copy of that Excel spreadsheet. And anytime somebody changes something on that spreadsheet, you're confident that that change is accurate. Okay, and we won't get into the details of how that happens, but that's the premise with blockchain, is that there's verifications on the changes, and it just cannot be changed. You'll hear the word immutable a lot, and that just simply means once it's recorded on the block, once it's on that Excel spreadsheet, that ledger, it cannot be changed. And so that gives people the trust and the confidence and the transparency that when you say, hey, I own 2.5% of this company, or I own, to put it in the crypto space, 100 Bitcoin, or I own, this Michael Jordan, rookie card or whatever, it's recorded on that ledger as the ownership. And I have complete confidence and faith that that's exactly what's going on. So when you transfer me that interest, I'm good, because think of it as your spreadsheet, and you've actually made the changes. You have no doubt in your mind that Excel spreadsheet is true. So that's really the main, the main benefit is the secondary market that doesn't exist today, providing that liquidity, which obviously, number one, benefits limited partners, right? The ability for them to get out after 1 year and put it on exchanges and have it sold relatively, and I say relatively quickly. The idea is instantaneously. You see the deal, you like it, you hit buy, and boom, the transaction's done. And theoretically, the same thing's going to happen with real estate itself. Now, with real estate, you're not tokenizing LLCs generally, because most of them you have direct title, but the title will just be represented in the form of a token, right? So if you own 100% of the property, then you're going to own 100% of those tokens. If it's a TIC and you have 5 different people owning it and everybody owns 20%, then I'm going to have 20% of those tokens. Same principle, same concept. And again, you can do that today, right? If you want to fractionalize a piece of property, you can still create an LLC, put the property in the LLC, and everybody can own 20%. But as you just can see, all the sort of the drag that brings on, because the outside world doesn't know who these people are. They don't really trust them. They don't know who really owns it. It's only those 5 people that have the operating agreements and stuff like that. So transparency and trust, and really just being completely confident of who actually owns that. That probably takes up 90% of your due diligence when you're buying a piece of property. Number one, making sure you own it, and number 2, that all the due diligence items are legit. And all of those due diligence items are going to be available to you, again, on this ledger, on this spreadsheet, on this blockchain. You can literally put the entire Library of Congress on this little Excel spreadsheet. It's all represented by its little hashtag or whatever, but you can put an infinite amount of data in that blockchain. So your operating agreements, your rent rolls, all that information, all that due diligence can not only be put into the spreadsheet that you're going to have access to, but you're confident that that is the true rent roll. I don't have to worry about that rent roll being falsified. It's been verified. It's on my blockchain ledger, and you're good to go. So that's primarily the main benefit, I would say, of tokenizing. There's a bunch of others, and we can go through some of those, sort of the pros. I think the other ones that come to mind is the globalization of real estate, in the sense that now imagine, you're somebody in China and you want to buy a piece of property here in the United States. You literally can just, with a click of a button, a click of a mouse, can actually acquire title to that. Now, there may be other issues there in terms of, anti-money laundering, and that's one of the cons that we'll talk about in a second. But it just makes the real estate, whether it's a syndication or the real estate, available to everybody in the world. A quick story that I just thought of back in the day, especially, again, not to pick on China, but as we know, China has a lot of capital controls. And so a lot of wealthier Chinese investors back in the day had a hard time, or an impossible time, of getting more than, I think the limit was like $50,000 out of the country. And so there's ways to try and get around that. Maybe you buy a nice Rolex watch that's worth 200 grand and you wear it on your wrist and you cross the border and you can get money that way. But what was a really, not I say popular, but what was a really interesting way for people to get value out of a country? Websites. People could go buy a website in China, doesn't have to be anything crazy, but you buy a website, whatever it is, abc.com, that's worth maybe $100,000, $200,000, $500,000. You buy that, you cross the border to the United States, wherever you want to go, and you can turn around and then sell that on the other side of the transaction. So that was kind of a way for people to get their value out of one country through a digital means. In that case, it was still the internet. But with tokenization, you're going to have something very similar where you're going to be able to, who's going to be able to control you if you're in China, that you want to go acquire a piece of property with your Chinese currency that you convert into whatever currency is out there, or cryptocurrency is out there at the time, move to the United States and move outside of China. And then if you want to sell that over here, you can do that. So it really helps on the capital control side as well. Obviously with the transparency, with the elimination, or at least the major reduction of third parties involved in these transactions, because of that trust that's between again, me and Drew, we have a trust, but we don't need a third party to do all the due diligence. All that is on the blockchain. Then obviously the cost comes down, right? And so there's just think of every single transaction you have, there's an enormous amount of cost that is associated with that particular transaction. So the more middlemen and middlewomen we can eliminate, then the cheaper that transaction becomes, the purer that transaction becomes, and those costs can then be passed along to other folks. And there's others, there's other cool stuff that we can talk about either in the questions if people have some, even if you guys have some thoughts on some cool things that you like on the tokenization, let me know. Some of the cons, obviously it's not all, rainbows and unicorns. There's a lot of cons still. And that's the reason why it hasn't, we're not there yet. It's going to take 5, 7, maybe 10 years, and only a few people are doing them. And by the way, if you are tokenizing, or if you have tokenized real estate, or you have done a syndication where you tokenize, drop something in the chat, because I'm sure we'll have questions for you too. But obviously I think the number one is the knowledge gap, right? I mean, people are still, they don't even know what tokenization is. They don't know what blockchain is. I mean, we're miles away from people having that knowledge gap, which is going to be a huge impediment for people to be comfortable with it. It's no different than the internet. I'm going to find that clip. I'm sure you've seen that clip of Katie Couric from the Today Show or something, when she's like, this is back in the 90s or something, and she's like, I haven't, they didn't even know what the @ was for email, and they're like, what is this email thing? And they're like, I don't know why anybody would want email. It's like, I'm already pretty busy. Like, it doesn't make any sense to me. And it's just a really funny clip. And that's kind of where we are. I would say we're way before that now. We're until we get the technology a little bit better, where it's more, and it's getting there. I mean, now we've got apps, and it's like, the interfaces is better. But once we need to get to that point where it doesn't seem too confusing and people get their minds around it, they're comfortable. It doesn't mean they have to understand. I mean, I'm not going to sit here and pretend that I've got blockchain technology nailed down. I mean, there's a lot of, there is cryptography involved, and there's specific reasons why these ledgers, these spreadsheets are immutable. But, on the other hand, how many of us know how the global monetary system really works, and how does a bank really work when you swipe that credit card at the store and money gets transferred from one place to another? Do you really understand that? You don't have to, right? You just know it works, and you get comfortable enough. Those of us who are a little bit older with our white hair remember when ATM started coming out. It was a little bit freaky putting that ATM card in there and hoping money would come out. So anyway, I think that's the number one thing, is the knowledge gap. Obviously, there's a lack of trading platforms right now. We still don't have there's some out there for sure. I've actually become a member of some of them just to kind of test it out, or I haven't bought anything, but just to kind of see what it looks like. And there's definitely people that are selling their shares on the secondary market, but it's nowhere near where it's supposed to be. There's really no robust platform yet. And obviously without that platform, this is all just sort of, ideas and stuff, but somebody's going to come in here and start building something. People are already, I shouldn't say someday, people are already building these platforms, and they exist. It's just getting those to a scale where you can have hundreds, if not thousands, and worldwide millions of people putting their their real estate or their syndications on there, and at the same time you have thousands and hundreds and millions or whatever of buyers. And then the other thing that still, I don't think we have solved this issue yet, but there's still some third parties that are required. I mean, there's still people who have to do the you've got know your customer laws, anti-money laundering laws. Somebody needs to figure out if you're accredited. A lot of this stuff is going to be automated through what we call smart contracts, which I don't want to really get into details, but I'm happy to answer questions about it. But you still have to make sure. Everybody's like, oh, it's all going to get automated, it's all going to be in the smart contract. Well, yeah, but accredited investor definitions changed. They changed a couple of years ago. They're probably going to change now. And so if you wrote a smart contract in the code that defined accredited investor a certain way, 5 years later, we don't know if that's really is still relevant. So yes, there are ways around that, and it's going to be tied to a third party, but that's another challenge that I think we see is, I think the dream is to completely get rid of people, sort of those intermediaries, but I still think there's some challenges there in that front. And again, there's a bunch more pros and cons, but I think those are kind of the top three pros and top three. Wow, there's a lot of questions. Top three pros and top three cons that I see right now. But man, I'm telling you, I not only on the syndication side, I truly believe that everything we have, maybe it's a little bit further down, but at some point, everything will be digitized, whether it's called tokens, whether they're called NFTs, but think of the QR code. That's just going to be an NFT instead of now we're kind of getting used to. I actually, Drew knows this. I actually used QR codes at my presentation last weekend for the first time. I didn't really know what the hell I was doing, and I'm late to the party. But your concert tickets, your airline tickets, all that stuff went from a paper ticket to a QR code. That's just going to become an NFT at some point, because again, when you enter the concert, there's always the concerns like, oh, somebody using the ticket twice, or my airline ticket. When it's on the blockchain on this Excel spreadsheet, we all are assured that you are the correct owner of this airline ticket. You're the correct owner of the car, the marriage certificate, all these things, I believe, will eventually become tokenized. And right now, people are saying the term NFT, the non-fungible tokens. Who knows what they're going to be called back in the day? What do they used to call social media, right? Web 2.0 back in the day. If you really want to get a trip, there was somebody on Twitter that I should have written down the name, that they went through the whole history of the internet, like when it started back in the 1950s or 40s, or I don't even know when it, and it wasn't Al Gore who came up with the internet, but the evolution of the internet. You can see how, it was around in the 70s and 80s, but it was just all based on these protocols and codes, and nobody really figured it out. And it wasn't until we started getting interfaces that were friendly, where I didn't have to see all that back. Obviously, for me, my age group, AOL was a big one, right? And AOL wasn't really the internet, but it was a way for people to have an email address and get access to it. And so we're not there yet with the tokenization, but the day that happens, you're going to start seeing that's taking off. So anyway, that was my little ramble for 30 minutes. Hopefully that was instructive for those of you who didn't have any idea what token is. Hopefully you got some value for that. For those of you who do know a little bit about tokenization, if you leave with nothing from this little spiel, it's that we have regulations. There's no ambiguity. The SEC doesn't think there's any ambiguity. You are going to have to, if you're tokenizing your syndication, maybe an LLC, and you're raising capital. Remember what I always say: the structure itself doesn't matter, right? So now I just have to add tokenization as another type of structure. So whether it's a LLC or an LP or a profit sharing agreement or a TIC agreement or this or that, or handshake, doesn't matter. Are you taking money from passive investors where the returns are generated by your efforts? If the answer is yes, it's a security. And these are clearly securities, because we already know they're securities, because you're doing a syndication traditionally through an LLC. So anyway, I don't know if that was instructive. I don't know if that was more, if you left with more confusion than not, but I'm going to get to questions specific to that. So hopefully that was helpful. But Drew, right off the bat here, first person in here. Drew, so will syndication exchanges start popping up then to make that say? Yeah, they have to. I mean, they're, again, and I probably should have written them down, and maybe I'll post it on the community, the Facebook community, the ones that I've seen and I'm a part of. It's kind of fun to just register and then just kind of mess around, see what those offerings are. But so there are a few, but when you see these exchanges, there's literally 4 deals on there, right? And so it's not really like, oh, I need to go buy real estate. I've got 25 grand and I like to buy something in Dallas, Texas, because I really love that market. Let me go. I mean, imagine when it gets to that point where you're like, hey, I really like this marketplace, and I really like, I mean, you can start filtering when there's enough volume in there. It's like, I'm looking for multifamily, over 200 units in, this suburb of Dallas, and boom, here's 20 projects that you can look at and review and hit buy. And I'm sure by then you'll be able to buy $5 worth, theoretically. I mean, if it gets to the point where they really do get those transactions, those third parties out of there, and it's just a one-on-one, just like buying an NFT today or something digital. So absolutely, that's the whole thing. I think if you ask our good friend Robert Helms, he'll say that same thing. That's the number one challenge, is not having the exchanges to the point where they need to. And again, you've got to wait a year. So you're actually, if you're doing a syndication today, you're sort of looking at a year from now, like what's the landscape going to look like in a year from now? And as we all know, technology is not a straight line, but it's sort of exponential. Todd, yeah, they already are. Yeah. If anybody has the names, by the way, you may want to drop it in the chat if anybody has used one or has the names of their favorite secondary market trading platform. There's T0 and all those kind of things, but there's other smaller ones that have been popping up. We're going to be we talked about it last year, but there's what's the ski resort? But anyway, there was a syndication of a hotel in not Vail, but whatever the ski resort is, and that's kind of the more famous, probably one of the first tokenizations of syndications. They end up selling like, I don't know, 18, 19, 20% of the hotel, and that's in some of those exchanges. And the shares are trading at, just like the stock market, $270 a token, and whatever the tokens that you're buying. Damian Leonard, hey Damian, how you doing? Do you see tokenization changing the SEC rule of 506B versus 506C in the future? No. Other than I do see them coming up, not changing that, but potentially creating a whole new set of regulations. But man, if this is going to take 5 to 7 years to become prevalent, having that kind of legislation is going to take freaking forever, right? The government, good luck, right? But I do think at some point it makes sense for us to be talking about, because there's some other stuff that we just don't have to deal with right now. For example, these tokens, you know what these tokens really are? They're just code, right? Which is part of the problem, because none of us really, very few of, I don't know if anybody on here knows how to code or anything, but when we're talking about codes or smart contracts, and auditing those kind of things, that's just something new. And so I would see sort of either a brand new set of rules just for the tokenization piece, or maybe just an addendum. Maybe they do come up with, an addendum, but I don't think it's going to be, instead of 506B or 506C, it's going to have to cover everything. That was a convoluted answer, I know, and I apologize. But so the answer is I don't see them changing that very, very soon. But B and C have to do with the qualifications and the way you raise the capital. And I don't think that's going to change. Again, I think they might come up with some new rules to address the specific nuances of a digital asset versus a LLC certificate. But first of all, just think of the LLCs, for example, they're all state. You got to go to the state of wherever the LLC is formed and get, all of the laws of that. Texas, for example, has an LLC statute. Well, they're going to eventually come up with, the state of California is going, I'm sorry, the state of Texas and all the states are going to have to come up with, digital asset statutes, right? And so I think that is going to come into play. Sorry, Damien, I know that sounded really confusing. So feel free to ask that one again at the bottom if you want to follow up. Aman Sachi, how do tokens play a role in the LP side? Will they be able to cash their tokens or still hold for a whole period? Yeah, so it's going to be no different from that perspective than it is today. Again, it's just a digital representation of the LP interest. So if you want to hold the LP interest and not partake in this secondary market, and you want to hold it for 7 years or until the deal goes through, then you can do that. There's nobody forcing you to sell it, but it's just an additional option that you would have if you wanted to get out. And maybe it's because it's one of those emergencies, or maybe it's because you're maybe concerned about something and you want to sell, you can do that. But certainly you're able to either cash it out to a secondary market when that's there, or you can hold it for the entire period. It really is not, you can really think of tokenization as fairly simple when it comes to the security tokens. It gets a little bit more complicated when people are raising money for these utilities. I'm sure I'm going to butcher the name, but there's a company, I think it's FTX. You crypto guys can probably confirm this, but there's a company, FTX, if that's the right one I'm thinking of, that, during this whole crypto slide, I just kept seeing FTX as the company like bailing everybody out, loaning people money or buying people out or getting them out of BK. And I'm like, man, this FTX company, they seem to have their balance sheet pretty tightened up. Maybe these guys are going to end up being the leader of the space. And so I started looking to see if they had any tokens for sale. And they did, but they were utility tokens, meaning I could spend $50,000 or whatever that was on one of the utility tokens, but I didn't mean that I was participating in the revenue, the profit share of the company itself. It was akin to me buying, American Airlines mileages because that was a particular utility. So anyway, I thought that was pretty interesting. But yeah, you don't have to sell if you don't want to, Aman. It's just a digital representation of the LP shares. Anthony, yes, there are exchanges already like, there we go. stowmarket.com. That's not the one I have, but stowmarket.com would be one. I would just encourage you guys to go to all of these, just get an idea of what these look like. Most of them require you to register because, again, all these guys have a know-like customer. So you've got to sort of, the other myth right here is obviously the crypto and just being very private, which it is. But the problem is, once you get on exchanges or once you get on one of these platforms, the governments are regulating that part where they're going to have to figure out who you are and confirm your identity. But I would recommend just signing up for 3 or 4 of these. So stowmarket.com. Thanks, Anthony, for dropping that up. Alan Villegas, how are cash distributions done on tokenized syndications? Great question. So what's going to happen, or what's theoretically happens now, is obviously if you're the syndicator and you have 10 investors and everybody, let's just say everybody's at 10% interest and you're giving them dividends. Well, what happens if those investors go out to the secondary market and start selling these to other people? How do you keep track of who the owners are? How do you keep track of who owns, what percentage do you own, and who do I send the K1s to? Who do I send the distributions to? So you're going to go through, again, a third party. There's an agent that you would go through, so that agent, all the buying and selling has to be recorded with a particular agent, so that the syndicator knows the current status of the cap table. They may not know, well, they actually will have to know, you're actually going to say, you may, through the exchange, you're going to have to know the identity. Again, you may have sort of an encrypted wallet or something, but at the end of the day, somebody needs to get a K1. Somebody needs a bank account. For me, either a bank account, or I guess right now it's a bank account. People are just, exchanging those tokens for cash. But in the future, obviously, I could see a world where you wouldn't be wiring cash. You'd be, depositing either that token or other, some stable coin or something into their accounts. But yeah, there's going to be a third party. There's a third party agent that handles all of that. So almost think of it as the broker. So they always know when you're selling it, you got to go through this third party. And again, eventually that might be available in the smart contract, but there's still a lot of holes in the smart contract. Nothing else, just auditing the smart contract. Again, a bunch of code. How do we know that code is not going to fail? Somebody has to audit that and make sure that the developer hasn't, there's no leakage in that code. But yeah, so distribution, somebody needs to keep track of that. That's done through a transfer agent, Alan. This is great. A lot of new names in here. I figured, yeah, we did get 53 people smack in the middle. I don't know, like if you came in late, I wasn't sure if this is going to be a 100-person event or a 10-person event. I guess we're right in the middle. Valuation is important if people want to trade them in the market on a daily basis. That means syndicators need to provide a lot of data to third parties on a frequent basis to figure out valuations. Although, valuations, yes, on a security, typically it's going to be valued on obviously whatever the value of the underlying token is. But at the end of the day, valuation is what somebody's willing to buy and sell it for. And so if you get to the point where you have a robust marketplace, it's going to be the back and forth. I mean, syndicators may not be super motivated to spend the time and money to go provide appraisals or whatever. So, but you're right. I think there are going to be third parties that are going to have to go out there and do that due diligence for you. Or, and again, that's kind of one of the limitations that I mentioned, is just the lack of, or not the lack, but still the need for third parties. And for this to truly be what people think it's going to be, that solution has to happen. And I know there are people working on it, and I wouldn't be surprised that those things will get solved sooner rather than later. But right now, the third parties, there's still a lot of third parties in there. What's happening now is the amount of third parties needed is shrinking, but by no means is that being eliminated. So thanks, Shriram. I appreciate that comment. Aman Shashi, will there be any accredited investors for investments through tokenization? Will there be any accredited investors? For sure. I guess the question you're going to say is, what about non-accredited? Most of the deals, like I said, are 506Cs. I would say the vast majority of 506Cs. So if you're doing, again, just like any of the regular, if you're doing a 506C, they'll be accrediteds only. But if you're doing Reg CF, regulation crowdfunding, you are allowed to have non-accredited investors. There's some limitations as to how much they can invest, but you can have non-accrediteds, and the same with Reg-A-Plus. There haven't been a ton of Reg-A-Pluses. In fact, until recently, there hadn't been a single one of them. And over the last 3 or 4 years, there have been more and more Reg-As that have been approved by the SEC. So again, SEC is looking at this stuff. They're saying, hey, this is security. And as long as you're complying with all the risk disclosures and just following the same syndication rules, they're going to approve these things, and they have. So it can be accredited or non-accredited. I think one of the challenges that I haven't quite wrapped my mind around it is just the verification part of that, right? So it's possible, and this is the promise that you'll read a lot about, is that you won't have to necessarily, the verification will almost be automatic. It'll be written into the code where in order for me to transfer this token from me to you, number one, a year must have gone by. So they have to look at the calendar. And so a year must go by. And this person needs to be accredited pursuant to some third party, again, some third party exchange or intermediary, right? And so there's all these checklists that will have to happen automatically before that token can be transferred to the buyer, and accredited status is going to be one of them. And again, I just don't see how you get around having to have a third, again, maybe it's verify, most of us use here Verify Investor, not to give them a specific plug, but the vast majority of my clients use those guys to verify their investors for accreditation status. So maybe somebody like a Verify Investor, connects to the smart contract. So there's a way for them to confirm like, yes, this person's already isn't accredited, they're verified, they've got their verification letters, all that stuff, so that the smart contract can then automatically just check that box. Okay, great, check that box. Great, check the box that it's been more than a year. Check all the requirements, and if they fulfill that, boom, it executes the offer automatically. But you still need that third party, like the Verify Investor, which again, one of the challenges. Laura, thrilled to see what you're doing here. We are an advisory firm that partners with GPs. Let's see what this is. An advisory firm that partners with GP. Oh, an advisory firm that partners with GPs to help them create their own security token offering and marketplace for raising capital. I would love to stay in touch with everyone here. Yeah, follow, please. You guys should all be putting your LinkedIn and info. Please, this is, maybe we should have a networking part. I don't know if that would make sense, or if you guys think that would be helpful, but maybe the last 10 minutes or an extra 50 minutes, I can just let you guys chit chat and think. But yeah, great, Laura. That sounds like maybe you and I should, and I think we talked already, but yeah, if you're advising people how to, how to do the GP, the tokenization, that would be very cool. Jeffrey, what blockchain is used to record the tokens? I'm not handling that part of it. It's definitely not Ethereum. I'll tell you, I'll tell you that much because of their fees are so high. But the T0 and Securitize are the ones that we typically use in terms of the blockchain. But again, that's probably going to change as this things evolve. But it's not one of the big ones. If anybody knows that, again, if anybody's done one before, make a comment in there and then let us know which blockchain you used. And I'm pretty sure it's going to be one that not everybody has heard of. Justin, I own 4 shares of an Airbnb that is tokenized with Pace Morby. Yeah, we just did that one for Pace. I'm assuming it's the one. Is that the CF that we did, or? But yeah, that's awesome, Justin. Yeah, so Airbnb, that's just a syndication. Is that one, Justin? Interesting. Is that the one that has multiple Airbnbs or just the one? Bobby Sharma, fractionalization. Yes, tokenization on blockchain is in the works. I would say it's already there. It's just not at scale. Tyler, we have tokenized an asset and are tokenizing a large storage complex right now. Great. Tyler, are you using a 506B, 506C? Probably not. Are you using 506C, I presume?
The asset that we tokenized, we did a 506C, and then the storage complex is a 506B because there's a pre-existing asset that we're digitizing.
And do you have a smart contract built into that token? Or not yet?
Well, no, yeah, honestly, I'd have to, and he's on here. I don't know if he's live to chat in, but I have a technical team that builds the smart contracts and stuff like that. Yeah. No, there's not, obviously, as you know, it's just coding,
right. Correct. Yes,
so correct. Yeah. If you do this, then you do that. So to actually mint the tokens, we didn't need to, we had to do an atomic swap, and that's probably a whole nother conversation. And now I'm butchering what my technical guy says. But no, we didn't need to do that.
And we're the same way. We don't actually token. So let me just walk you, let me give you maybe this will be helpful too, just sort of walking through the process of what it looks like. So the beginning process looks very similar to a regular syndication. You're going to talk to your securities attorney. We're going to structure it, and we're going to do the same thing. We're going to figure out what exemption. Okay, great. It's a 506C. We're going to put together all the legal docs, the PPM, all the disclosures. Obviously, there's going to be very specific disclosures regarding, this being a digital asset and all the risks and rewards associated with that. And then what's going to happen is usually you issue the security first, and then prior to the 1-year anniversary, that LLC unit gets tokenized, it gets minted, which means it gets created. But that goes out to a separate team, obviously. Like I said, T0, Securitize, these are all companies that will do that. And we actually outsource, once we're done with the sort of the legal paperwork, the next steps 2 and 3, we outsource that. So I'm not necessarily the best person to get on the nuances of how that minting process works. But obviously, not obviously, but most people aren't going to do that in-house. You're just going to hire a company that's going to go ahead and mint it. And to the extent there's going to be a smart contract, like you said, it's a little bit of a misnomer. It's just an if-then. So if this happens, then do this. And that's just computer code, and they'll work with you to do whatever it is that you're looking them to do. They'll actually go ahead and do it. What I'm not sure about, and I don't think there's a very generalized thing, is just, again, auditing. We all know that people can just have holes in their code, and people might be able to get through that and sort of break it and maybe invest when they shouldn't be able to invest. And so that's one of the challenges. Christine, Laura and I met back in March at the blockchain event. She is the real deal. Oh, great. I'm very professional. Got to be here. Tokenization is on the move. There you go. There's one for Laura. David, you can use any blockchain protocols, correct? Ethereum is one of the most popular, but others like Polygon will be used more because of the lower gas fees. Yeah, I mean, I've used Ethereum just because I bought it. Again, I like to do things, and so just to learn. So I mean, I bought a bunch of random NFTs, and Ethereum is a pricey. Gas fees are just transaction fees, and you end up spending quite a bit. Damien, the closest to tokenization I've done is a $12 million Banksy Museum art piece through Masterworks. This is pretty much how the platform works, but high-end art versus real estate. Again, you can tokenize anything, right? Baseball cards, artwork, anything. Future profits. Michael is in the house. Michael, how you doing, buddy? You still on? Michael Flight. I know there's a lot of Michaels. Michael's getting ready for the event. Hello, everyone. Mauricio is a great friend. I've been in tokenization with STOs and consulted on ICOs since 2018. Looking forward to seeing Mauricio and Laura at the Blockchain Real Estate Summit this week. Hi, Michael. Thanks, Drew. My QR code this past weekend was excellent. ICE is diamonds on the blockchain. Okay. August, we have tokenized our syndicated offering for a while now, the first and only regulatory compliant tokenization platform in Canada. More than happy to discuss our experience. August, you want to come on real quick? Are you saying that in Canada, there's only really one platform that's been accepted by the Canadian Regulatory Board? He may have dropped off. I saw him earlier, but it's past 7. So, well, that's cool. Check it out there. August is a great guy. So if you want to connect with August, look that up. Kevin, will the US government create their own token to keep the industry under their control and have an ability to control the system? Not to get political, I have no doubt that the US government will create their own digital currency. I think that's a foregone conclusion. China's already doing it, and I'm fast forward 10 years, I guarantee you we'll have some kind of a digital currency. That's not a conspiracy. That's just a practicality thing. What I don't know, and I doubt, is that it'll be really on sort of blockchain, and if it is blockchain, it's going to be a very centralized blockchain. That Excel spreadsheet, it's only going to be the government that has it. It's not going to be a distributed ledger where everybody has a copy and everybody has to check their work. So it's coming, but I don't think it's going to be something different than what's going on now. And of course, you're talking specifically about a currency token, like to replace sort of money or currency, if you want to use that word. Again, this is not a currency. I mean, cryptocurrencies is some of it is currency, some of it is utility tokens, but that's a little bit a different thing. This is specifically would be competing with sort of a Bitcoin, for example. But yeah, I do think they are going to create a digital currency, whether it's to control or whatever. That I will punt on. Michael Flan, Alan, Michael is answering a question that I don't. Alan, depending on the tokenization platform, the distribution can be ACH payments, US stable coins, or even in Bitcoin, Ethereum. Yeah. So the distribution can be anything. I think the whole point of this is that eventually you'll get to the point when this is mature, that they'll have some form of stable coin, that's how you would get distributed. And again, stable coin it's just if it's a true stable coin, it really is just a way for you to not have to worry about that currency risk. I mean, if you use Bitcoin to do your transaction, and this is one of the reasons Tesla, I think, stopped doing it, but if you use Bitcoin for your transaction, and in the middle of your transaction, Bitcoin goes down by 20% in the day, which it has, that's a problem for you. So a stable coin essentially is pegged. It's almost like, not almost, it is a peg 1-to-1 to the dollar. So, but there are some issues, as you've seen, with that as well. But so yeah, I would anticipate that when this is fully going, that they would be primarily digital tokens that'll get distributed, whether they're stable or some other, maybe by then Bitcoin has been stabilized and it doesn't fluctuate very much. But I agree with Michael. Who might disagree with Michael? Slade, anyone have success using Reg-A-Plus as an exemption and issued to non-accrediteds? I don't know if anybody here has had a success, but I know there has been Reg-As that have been reviewed by the SEC and approved. I'd have to go back and see whether they, well, actually, I wouldn't be able to tell. Oh, maybe I could if I looked at the offerings. I can't remember or didn't see whether they are non-accrediteds in there. My guess is that the documents would allow them the option to get non-accrediteds, because that you do have that option with Reg-A+. Whether they decided to take non-accrediteds, that is a different question. I would probably stay away from non-accrediteds just because your risk is a little bit higher, but there are several Reg-A+s that have been approved by the SEC. So this is not, so they exist. Andrea, I have a Zoom with Brad Sumrock, our good friend Brad, starting in a minute, but I wanted to say hi. Hi, Andrea, how are you? That was 7 o'clock. I think that's the one with Kathy. Yeah, T0, Securitize, INX, INX, Edgeworks. These are all exchanges. Yeah, Michael, T0, Oasis, Pro Markets. Oh, Aspen Coin. That's Aspen, Colorado. That was the, I think it was a Ritz-Carlton or a Four, or maybe a Four Seasons that they tokenized and sold about 19% of. Yeah. Oh, St. Regis, Aspen, St. Regis. Thanks, Laura. Aspen. Sorry, I'm just reading this stuff through. Maybe I should just, so many of them actually. If somebody's got a specific question that has to do with tokenization, just unmute yourself and ask it. Let's do it that way, because I'm not going to have time to go through all these. There's a lot of questions, so I appreciate it. Mauricio, then there's a lot of people, there's a lot of, sorry, Laura. And there's a bunch of people who are offering, they've got information. So check out the chat and feel free to connect with everyone. Hi, Laura, how are you?
Great. So awesome that you're doing this. I just love it. And I just love seeing everyone here. So congratulations. I would just love to say, I know that there's so much confusion out there about what this is and how it's being done. And there's two different ways right now that are emerging that you can do, that you can raise capital or digitize, tokenize your real estate. And that is one through a marketplace. And then the other would be through a white label solution. So I see it all the time. Oh, this company's, tokenizing real estate. This company is tokenizing real estate. And a lot of those providers are the software, right? They are one piece of the puzzle. There's upwards of 20 different providers that are, that could potentially be involved in one security token offering. And the technology, the tokenization platform, right, is one piece of that. So if you're going to do that, if you have interest in doing that, you have two potential options. One is a marketplace that has already been created for something like this. And then two is to white label your own, so you can create, your own marketplace, right? And that's the kind of thing that we help with.
Yeah, that's great. And I would definitely recommend you connect with Laura, because again, I focus on the legal piece, right? And unlike, unlike a traditional, there's obviously part two, and that's the part that we really don't get involved with. We would outsource that and have, make introductions to folks like Laura. But I focus on the legal part, just making sure that the capital is being raised. But once that offering is done, and sometimes you could theoretically, you could do it ahead of time. You don't have to wait a year to token. You can tokenize it. Theoretically, you can mint tokens, create tokens, and then actually issue the tokens from the get-go. But most traditionally, you raise the capital, you do the LLC, and then because nobody can do anything for a year anyway, you've got a year to get that tokenized, unless there's some really crazy exemption that you're looking for. But thanks, Laura. And I'm going to see you this weekend, right?
Yeah, I can't wait. Thank you. And just kind of on that note, what you're saying is that if they are doing a Reg-A+, right, they do need to mint those tokens right away. So those Reg-As can trade instantly, right, pretty much. So you have that, there are those offerings that are minting right away. But we've seen traditionally, like you're saying right now, should I say traditionally, but those Reg Ds that are taking a year, right? So you really don't need to do that minting right away.
Right. That's a good point, because the Reg As aren't subjected to that 1 year, hold period. So that's the nice thing about the Reg-A-Plus is that they're freely tradable from day one. But the ones that we've seen the most, again, we have not done a Reg-A. I don't usually do Reg-As generally. You want to go see my episode of Reg-A back in the day, back in my original lives. But with a 506B and 506C, which is the ones that we usually see, you do have that 1 year hold period generally. And so those tend to start tokenizing. But you're right, if you're going to do a Reg-A, you should tokenize it right away, because the minute you issue that offering, once it's been approved by the SEC, literally the next day you can start trading it if you wanted to. Cool. Well, thanks, Laura. Looking forward to seeing you. I'll be there on Friday. I'm sure I'll see you there.
Absolutely.
Thanks, Laura. Anthony raised his hand. Look at that. Anthony, go ahead.
Mauricio, I just wanted to ask about international investors. How do you see the regulations with them? I know you have to do the KYC AML, but do you see international investors investing in these types of projects yet?
Yeah, so that's going to be, that's a great question, because again, international investors means Reg S, right? So you're not going to be doing a 506B, if you're purely doing one of you, that section is going to be 506B, 506C. You're not doing one of those. You're going to do a Reg S. And again, the US generally doesn't care about those investors. And so what I usually say, and it's kind of a throwaway comment, but when you're doing I think a security token offering, it's less of a throwaway comment, which is, obviously, I don't know the securities laws in country X, so make sure you check with them to make sure you're not violating them. I don't think most people violate them unless they're literally like, maybe if you're doing it in Mexico because that's where you're from and you've got friends and family and you're literally traveling to Mexico and doing presentations and advertising in Mexico, then maybe you might be running afoul of Mexican securities laws. But generally speaking, it is kind of a throwaway comment. But on this one, I think you do have to pay a little bit more attention as to the securities laws and the regulations of what that particular country is looking at. And again, it just depends. I think I want to say most country, Laura, I'm going to ask you this question, Laura, because you've got more experience here. I would say, and I may be wrong, but I would venture to say with no backing whatsoever, that the vast majority of countries are a little bit more liberal than the US. Like the US is a little bit more strict on the regulatory side, unless of course you're talking like China and some of those countries. But in general, do you think the world as a whole is more lenient and don't consider these securities and a little bit more lenient than the SEC?
Yeah, I would think that. I mean, a lot of countries out there right now, relatively speaking, right, are doing these as NFTs. So it is a very different type of regulation. But with Reg S, like you're saying, and we always defer to legal, right? But with Reg S, it's yes, they can go to foreign investors, but you do have to file in the country that you're going to solicit. And it's really important. A lot of people don't realize that.
Yeah, you got to do whatever that country is. I mean, like I said, I'm very upfront. I don't have the first idea of what securities laws in Mexico, or maybe Canadians is the closest because they have very similar rules. And look, I used to live in Belize, and I always joke that Belize has no securities laws. Like if you're, so man, I just looked at it's getting dark out here in Austin. So I'm starting to look a little shadowy. I apologize. So yeah, I think that's right. And so I think a lot of these other countries they're probably going the ICO route. They're probably just raising money with like a 4-page white paper without much disclosures. And that's how people, so yeah, so again, the answer to your question, Michael, Anthony, is definitely make sure you're checking the jurisdiction where your investor is located. And again, I don't know how easy it is to go find, a tokenized professional out there in that particular country, but you want to make sure you're not violating their rules. Yeah, if you guys, I mean, I know it's late in terms of the thing, but Michael's, this conference he's doing has grown from last year to this year. And so if you guys are interested in this topic, I would highly recommend checking his I haven't talked to him about it, but I assume there's going to be a summit in 2023. And again, I'm not plugging, I wasn't meaning to plug or anything. Michael's a friend, but it's like, he does have the recordings available. So you can actually purchase the recordings of the last year's conference. And I'm sure you're going to be able to purchase that this year. But I would highly encourage you guys to go visit next year, go meet. And if there's another real estate blockchain conference anywhere, just go start meeting. There's so many providers and people who actually do the minting. Laura is a great example. And just go meet the people out there and see what kind of things that they're offering. And I guarantee you, as time goes on, you're going to see newer and newer things pop up. So I highly encourage you guys to go visit. So anyway, 7:30, I'm almost disappearing from screen. So I will let you guys go. I appreciate you guys being here as always, and looking forward to seeing you guys next Tuesday. And I have no idea what the topic's going to be, but we'll think of something. If you guys have suggestions, go to the Facebook community and or DM me, and just if there's a topic that you have a particular interest in that we haven't covered, then please let us know, and we'll do it. Thanks everyone. Appreciate you guys.